do you think the days of deeper corrections, perhaps exceeding 5%, are over for our markets because of the sheer volume of domestic inflows that keep coming in month on month?
That is true, Siddharth, and that is what we have been seeing, most recently in the last 12 to 18 months, that the market corrections bigger than 5% have been prevented because of such strong flows. My worry at the margin is that in this calendar year, in calendar year 2024, if you add up all the sources of inflows, including not just the mutual fund, but also the single stock purchases and also the insurance and the pension money that is going in,
Correct.
we are looking at almost $8 billion a month, right? And this is now for the first 8 months of the calendar year, for which we already have the data for. So this number annualizes to more than $90 billion a year. That's a very, very large number. And to put this number in the context of macroeconomic variables, a $90 billion plus of inflows from the domestic sources into the equity markets is more than 25% of the household financial savings, on an annual basis. It's a very large number. These kind of numbers are seen only in the developed market. So my worry at the margin is that whether such a high quantity of domestic flows that we have been seeing, will be sustainable. I'm quite sure about the fact that the domestic flows are here to stay, and will continue to be a big supporting factor for the markets going forward also. But this 25% of savings, or more than 25% of savings, looks like a really high number to me. And I have my worries, on that whether it will sustain at that level. Maybe a more sustainable number will be, say, close to $4 to $5 billion per month rather than 8 billion that we're seeing right now. Uh, but what that level of equity demand has also allowed, it has created an equally sharp response from the supply side as well. So we see large number of IPOs and QIPs and block deals from promoter blocks and the private equity blocks. All kind of supply has been coming in, and the current level of domestic flows has been able to absorb that very easily. Um, but going forward, if the supply remains where it is, it can cap the near-term market returns, and which in turn can bring down the level of domestic flows as well. So that would be my worry from the next 3 to 6 month point of view.
If you like the video, do like, comment, share and subscribe.